Well, guys, we are here once again. It is, it's the midway point of 2017. It is also Stampede Week, but more importantly, it's actually June market report time. So I wanted to hit you guys up with something here and walk you through as quickly as I can. I want you to stop your stampeding, and I want you to listen in just for a few moments, all right? Fair enough? Can you tune in? Can you do this? It's the end of the workday. Some of you are probably a few beers deep on patios or at the Stampede, but nonetheless, this will be worth the listen. All right? And if you are here and you can hear me, please comment. I'd love to just know if you can hear me, if there are any eyes tuning in, just let me know. Give me a thumbs up. Give me something that you can hear. Technology is fantastic, but it doesn't always work. Sounds good? All right, well, I will move along here. So again, for our market update, we believe here at Redline a couple things, that knowledge is power, and that both our agents should be armed with it, but we also believe that you guys as Calgarians should be heavily armed with it as well, right? A little dirty little secret that we know about you, Calgary, is that you love real estate. You're addicted to MLS, you're addicted to viewing properties. We love it as agents, but we also know you love it too. So first step is admission, right? So we believe in telling the most relevant bits of data, but we're also aware that an overload can just happen super quick. So I'm going to try to not do that for you. And if you ever wanted to know more about something, just reach out about your community area price ranges, types of homes. Let us know, comment, and I'll happily put some work together and send it your way. A little myth I wanted to hit on about Stampede. So the myth out there is that the market stops during Stampede, that this 10-day period is actually a real big lull in the real estate world. And they believe that this happens because of Stampede. Well, the answer is no, right? There are, however, less homes that sell in July than in most Junes. So we've hit the peak and we're starting to gravitate downward anyways, and that's a historical thing. It's not just a Stampede thing. There is more of a matter of the time of year than Stampede. So yes, it makes sense to have your home on the market during the Stampede week. It makes sense to list your home during Stampede week. Actually, if you think about it just for a moment, that there actually might be more of a reason to list during these 10 days than in the next 10 after Stampede, because a lot of people, a lot of Calgarians really like to enjoy the Stampede. And then after that, what happens? They get off on their vacations. Kids are out of school and off they go. Most of them meet us out in BC. So yeah, that's my myth right now. I wanted to start, as I always do, with State of the Union. A couple little things, the major facts that you guys should know about what's going on. And one of them is the tables have turned just a little bit. We now have gotten to points where inventory levels here currently across all of Calgary and area are higher than they were last year. And this is the first time this has happened here basically all year long. Most people are just going to report that stat. They're going to say, hey, 11% more inventory, and they're going to stop there. But I wanted to dive deeper, because I always dive deeper, because you guys deserve us to dive deeper. And that truly is that the inventory number that we have isn't just 11% higher, it's actually equal to the inventory that we had in 2011. So what does that mean? Well, what that means is back in 2011, what was the market like? Well, we were just slowly coming out of the recession. We were coming out of the slow time. The overall pace of the market hadn't picked up yet from those recessionary days. So this is also 30% more inventory than we had kind of when the things were flying in 2014 with our peak sales activity. Now, the good news, despite our inventory being higher and then higher, and as we did in 2011, our sales are actually doing better than those were. So that's a good point, that things are still moving along and our balanced market is continuing. The other one I wanted to talk about is the attached market. Now, attached market, what does that mean? Well, it's basically it's row housing, like townhouses, as well as semi-detached homes like infills. So this is a tale of two different markets, and I want you to be wary of the stats when you're looking at them, because depending on the property type you have, you're definitely going to want to look at it with a fine point so you can understand what it is you're looking at. And what I'm telling you here is that, the row house, the townhouse home, is actually struggling a little bit. Its year-over-year sales price have had drops, in the range of 5 to 6%, and every district's a little different. While the semi-detached properties, those infills, have seen nearly a 5% gain now year-over-year. So it is a tale of two markets within the attached market segment. So again, if you want more information about that and where you fall, please let us know. The other little thing about the State of the Union, what I wanted to hit you on, is median price and what that means and what's going on. So we see average prices, benchmark prices, and median prices. Right now on the curve, median prices are actually higher than benchmark prices. And what does this mean? It actually means that more homes are selling the upper price points than they were at this time last year. Median is the middle of all sales. So if you took all the sales that happened and you just put them on a big line and you pick the point in the middle, that's median. So when that actually is higher than your benchmark price, what that means is more homes are selling in the higher price points. So just something for you to know. The benchmark price is a truer valuation about how things are going. It means same property type compared to same property type from a year ago. But the benchmark number the median number that we're seeing is just showing that, wow, okay, there's more of the bigger, higher end pricings that are driving things and selling, and that's why our median price is higher. So yeah, that's the State of the Union. A couple interesting things I always like to point out is things that I find within the data that I think is relevant and you might want to know about. So one of them is the West. So the West detached market has seen price gains and up to the point of their overall pricing is similar to pre-recession pricing. So this isn't, to me, not just about the pricing. This is, to me, more about jobs. The West got hit pretty hard during those recessions and the layoff, correct, right? It was a lot of the professionals that had layoffs, and they were part of the white-collar, high-level jobs were what got lost. So now with pricing coming back up to those pre-recession numbers, it means that these professional level jobs are being resecured. Confidence is back up in the upper suburban pricing. And that's good signs for the economy in general, right? And Calgary as a whole, and there's a trickle-down effect throughout all the price points when this happens. So that's one. The other little thing I wanted to talk about, which is a little lesser known stat that most people don't look at too much, but it's sales price to list price ratio. So all markets this year have seen this improve, which means it's tightened, which means it's gotten closer to list price. So what this means, if we're just basing off of the average selling price in Calgary, that sellers are getting about $3,500 closer to their list price than they were during negotiations this time last year. So that says two things. It says buyers are willing to adjust a little bit more than in recent memory to get the home that they want, and sellers' price is they're just getting a little closer to the true value. Their listing price is closer to true value that the market's willing to bear. So that's interesting. Now, reviewing the months of supply trends, it looks like we've turned the corner and won't be seeing that continue to decline. So I've been telling you guys that the month of supply has been shortening up, and we've been doing much better than the last year. Well, we are still better, but when we look at the graph, we're seeing it kind of bottoming out. And what that means is we're likely not going to see that decline any further. Now, in order to stay a stable market, which we are now, what we're going to need to continue to see is that we hope inventory doesn't continue to rise as it did this month, and we also hope that the pace of sales continues to be better than it was last year. So again, those are two things we'll watch and I'll be reporting on. If that does shift and we see sales drop and inventory continue to rise, well, guess what? We're likely going to see a little bit of a correction or a bit of a softening. But right now, everything looks good. Hottest communities. This is always a fun one. So this month, there was 3 communities that kind of hit it out of the park. One of them was Diamond Cove, if you know where that is, just off of, Bow Bottom Trail and almost off the Deerfoot on the south side. it had nearly 300% more sales than it did at this point last year. North Haven did well again, a northwestern community, very affordable and great price point, and it's just slightly outside the inner city. And then Greenview as well, again, offers great value, lower price points, and it did really well. As far as one of the more larger markets, Parkland did fantastic and had a fantastic month. Now, with hottest communities, I always like to talk about the ones that have extremely low inventory. And there's really 1, 2, 3, 4, 5, 6, 7 of them that did really, really well and have less than 1 month of inventory. So if you are going to be a seller in those areas, you're obviously going to get your price very closely, and you're going to sell very quickly. So McEwen Glen did fantastic. Bonavista Downs again had a great month. Rutland Park, North Haven, like I mentioned, Diamond Cove, Glendale here in the southwest, and then University Heights as well, which is always has a low inventory. People want to be in that community. If I were to hit on one more thing kind of before I let you guys go, I want to talk to you about which areas of the city, based on the types of property, detached, apartment, semi-detached, and row homes, which ones had the best year-over-year appreciation. And what we're seeing on the detached market, I've told you this earlier, is the West is killing it. West had nearly a 6.8% increase year over year so far, as well as the city center, which again, there's quite a mix in the city center between the high-end homes in Mount Royal, Britannia, Connaught, Beltline. The city center did really well and has about 5% year over year price gains as well. Now, the West also had the best apartment segment. The entire apartment segment is actually year over year in decline, like I've been telling you, but the best one so far is the West, according to June stats, and it just had a marginal decrease. So best in the West. But the cool thing is that most people won't talk to you about is 3 of the 8 districts actually had improvements month over month. And that's the North, the Northwest, and the Southeast. So that's a good sign, because we haven't seen a lot of month-over-month increases really anywhere this year in the apartment segment, because it's been a bit of a downer. And what else can I tell you? Oh yeah, this one. So which price ranges are trading the most? So again, I told you there was a bit of a skew happening last month, where this year so far, the homes at 550, 600 and above were selling better than they were last year. This continues to be the case. When I look at 550 all the way up to about 799, that price range, the bulk of kind of the upper entry level to luxury price points have all seen really good kind of increases this month over what they did this time last year, and they've also seen a lot more sales this month than they have prior months this year too. So 2 things going for it, and it just continues to tell the strength of and the confidence of our market, that people are willing to put money where their mouth is and move their families in these move up price points, which says again, people feel stable and confident overall in their job situations. There's one also, when you crest above $1 million, the million to $1,250,000 again continues to do really well. That has done well, I think, the last 2 months in a row. So cool stuff happening there. If we look at which areas had the best new listings to sale ratios, which means of the listings that have come on the market, how many of them have traded, the detached market is doing the best. Nearly 80% in the West of the ones that have launched have sold within the month. So that's a really good number. As a whole, it's about 64% of all the homes in the detached market sell through in a given month, which is why there's not a ton of inventory for detached, only 2.3 months of supply. The other thing with that is that Northwest district continues to do fantastic. The Northwest district for detached homes is leading the pack, has the lowest inventory as a whole. There's a lot of homes up there, and they're selling well. Again, great affordability, great access. Neat new things like the Rocky Ridge Community Center that's coming, and things like that. When you look at The apartment segment, again, not to be a downer, but it's having its struggles. Again, only about 40% of the listings that get on the market will sell through in that given month, and the inventory in the apartment market continues to be above 6, so about 3 times as much as the detached market. So yeah, that's it, guys. That's your June market report, State of the Union, a little bit of dispelling the myths, some interesting things to note, your hottest communities. And again, as always, if you guys want to know more about what's going on, please just tune in. Next time, comment, and I'll happily reach out to you and send you guys what you need. So again, have a fantastic Stampede week. Stay safe. Come to our breakfast Tuesday, 8:30 to 10:30. We're hoping to feed another 500 or so hungry Calgarians. Bring friends, family, and I hope to see you guys, clients, friends, and agents. So signing off. See you guys later. Have a great one.